President Donald Trump's trade policies are now coming in for criticism from two pillars of support for his Republican Party. On Friday, both the Business Roundtable and the U.S. Chamber of Commerce raised red flags over the impact of Chinese retaliation and the prospect of further escalations. The Business Roundtable, a group of corporate CEOs, posted a statement opposing President Trump's recent imposition of tariffs on $50 billion of Chinese imports to the U.S., while expressing sympathy for some of President Trump's complaints about China's trade policies. Perhaps substantively, the Roundtable opposed what they called, quote, the administration's misguided focus on temporarily reducing America's trade deficit with China through goods purchased. The Trump administration previously attempted to float a package of supposed Chinese promises to buy more from the U.S. as a gain from the confrontation, only to see if the Chinese deny such commitments. The Chamber of Commerce President Tom Donahue towed a similar line, saying this is not the right approach. And in that regard, we now move to the trade war, and today we focus on China, as we were just discussing, and the United States. To help us out, we are joined by RT's correspondent, Alex Mihailovich, a trade expert from Toronto, and from our New York studio, RT's Chinese experts, Caleb Maupin. Thank you both for joining us, fellas. Alex, let's start with you. Give us some detail on what the Business Roundtable and the Chamber are saying.
Well, see, the same business people that were loving the tax cuts and loving the deregulation are not loving the tariffs against China so much, because they say that retaliatory tariffs from China are going to hurt a multitude of industries in the States, including manufacturing, farming, and, of course, consumers in general. Now, we have one guy here, and this man really stands out. When his voice is heard, I think we got to listen. We're talking about Gary Cohn. He's the former head of the National Economic Council. He was working closely with the Trump administration. And what he has said is that, and this was just last week, is that a trade war could wipe out all those boosts that we were just talking about from businesses, or for businesses, from the tax boosts they were getting. So this one cancels out the other. Now, talking across the board here, when you're hearing from the business world in the States, what people are saying is, yes, we do want fair trade with China, and we don't believe it's fair, but at the same time, putting us into a trade war with China is not the way to go. It's just going to hurt Americans as well as the Chinese, and maybe even the Americans more.
Caleb, put a finer point on what Alex is saying there. I mean, that it's not necessarily the policies of the Chinese that the Trump administration has a problem with. It's the practice of these tariffs, et cetera. What are the legitimate concerns that you believe are out there with regard to China?
Well, Bart, let's back up for a minute. Now, the idea of a tariff, in theory, is to protect American jobs and American companies, right? The idea is to, give preferential treatment to the domestic manufacturers, protect American jobs. But if you take a look at this tariff, we've got over 1,200 product lines from China that are being targeted. Take a specific look at what's being hit. They're hitting the devices involved in nuclear power. They're hitting aircraft navigation systems. These are things we barely produce ourselves here in the United States. If you look at it, this isn't exactly about protecting American jobs, and it has a lot more to do with punishing China. If you look at it, President Xi in China has been really pushing investment into research and development, pushing new technology, high-level technology products, trying to advance. And he's reached out to the United States and said, let's do it jointly. Let's have joint ventures, joint projects to develop new technology. And it's pretty clear. I mean, Donald Trump actually mentioned the Made in China 2025 program when he made the announcement. It's pretty clear that this is an intent to kind of punish China for their investment into research and development. Essentially, in the White House, and in the Trade Council, you've got Peter Navarro, you've got Robert Lighthizer, and these guys are professional anti-China agitators. Before they were in the Trump administration and in politics, they were giving lectures and talking against China. They've made a career out of talking against China and talking against them on the global markets. And unfortunately, it seems like our commander-in-chief has the ear of these rather fanatical individuals with an axe to grind.
But Caleb, I mean, they do steal. The Chinese have stolen intellectual property, and as a condition of moving to China, U.S. companies do have to sell off, give part of the companies to China. I mean, heck, if we went to Canada, where Alex is, and the Canadian said, no, you got to give us part of your company, we'd say, that's bogus. That's not happening. So are there legitimate complaints like that?
I think these are the issues that need to be negotiated. These are the kind of things that President Trump and President Xi are working to resolve. We've seen ongoing conversations about these issues. But, you know, this tariff, I mean, it's going to hit all of us here in the United States at the cash register. When we go to check out at the supermarket, if we have anything in our cart that's made in China, we're going to end up paying for this.
Well, I want to stick with that real quick, Caleb. Let's move to Alex. Alex, why don't you talk, because you've looked at this a lot. Tell us about what Caleb's saying. How's it going to impact consumers at the cash register?
Now, if you look at the big picture and you're talking about these tariffs, it's really a minuscule part of the trillions of dollars that are traded. But when it comes to the consumer, this is the trickle down that you'll see. And it's for everyday goods, electronics, TVs, like the LED lights that we use now in TVs. Who manufactures them? China. There's a lot of goods. I mean, you're shopping at Walmart or anywhere else, prices will go up. And guess what? I think we've seen things like this before. When prices go up, even if the tariffs go away, shops don't want to drop their prices anymore. They get to make a little bit more, a couple more dollars there. I'm not saying that's going to happen for sure, but it's one of those things consumers need to be afraid of. There's a bigger picture here, though, in the States. It's not just going to see how many more dollars you're going to pay because of these tariffs. Tariffs cause disruption, and especially when you have this back and forth constantly, this retaliation, the threat of a trade war, you're disrupting markets, period. You're making investors nervous. When you make investors nervous, you're affecting your economy. When you're affecting your economy, you could put it into a recession, or if just growth itself, it just stops. It could be some type of stagnation. Any way that you turn it around, it's not good for the people of the United States, because you can have inflation, and inflation is not a good thing if it's going to grow any more than it's growing. And that's what something like this can do. If you have a trade war, and that's the worst case scenario, yeah, that's going to be bad for everyone. But even these type of talks destabilize the market, and that should be a major concern at this point. We know this isn't happening until July the 6th, though, of course, there's going to be negotiations. But even talks like this, we've seen the ripple effect up to now, just with these threats that have come into place, never mind tariffs actually going into place themselves.
And Caleb, talking about that impact, and you have to consider the source here, but Richard Liu, the founder and CEO of JD.com, that large Chinese e-commerce company, one of the largest online retailers by transaction volume in the country, they say this isn't going to help the United States. Should we just assume that this is coming from a Chinese company and not be right? But what's his point?
Well, if you hit an economic superpower like China, you can expect that they're going to hit back. Now, we've already seen a response in terms of tariffs. Our agricultural sector, we've been selling food to China, exporting our food. They've been buying it. Well, they've already been hit. But now there's talk on the Chinese side of hitting us in the energy markets, right? China is a top purchaser and importer of American oil, American natural gas. Now there's talk that China might respond by hitting us in the energy markets. And let's step back for a minute. You know, the way that China has approached this with their Made in China 2025 has been, let's cooperate. China says, they're going to invest in new technology, research, technological breakthroughs. They want to bring American companies in on it. They want to do it in a win-win way where both of us, American companies and Chinese companies, can get richer in the process, and we'll make new scientific breakthroughs. But it seems like punishing China for Made in China 2025 is going to have the opposite effect. It's not going to be win-win. It's going to be lose-lose. We're going to lose out. China's going to lose out. But how much is China really going to lose out? Let's keep in mind, because at this point, China's got the whole world to trade with. They're not exactly dependent on the United States to keep their economy rolling.
They've got the whole world in their hand, Caleb. Absolutely, you're right. I want a quick move. We only got about a minute left, Alex. Caleb mentioned energy. How do you think this might impact the energy industry, U.S. energy industry? You cover this a lot.
Well, you know what? Caleb made an excellent point there. When you're looking at oil, let's bring up a graph right away and give you a good idea of where the U.S. stands here. Look, the U.S., when it comes to oil exports, has grown exponentially. It's beat out Saudi Arabia as number 2 in the past couple of years. We've seen this energy industry just soar. And when you're talking about China, this is according to shipping data from Thomson Reuters, Icahn, U.S. crude, and get this, these are huge numbers. Crude oil shipments to China have soared in value recently, jumping from just 100 million per year, or per month, I should say, in early 2017. We're looking at $1 billion per month now. That's huge. Oil industry has already been hit here. We're seeing stocks of Exxon going down from last Friday, of Chevron. And just think now, you're going to have Russia and the Saudis open up those pumps a little bit more. They're going to open their taps. Oil prices are going to go down. This is not what the U.S. wanted to see. And China has other people to fill the gap. Yes, they do. And one of those countries happens to be Iran. And you know that's going to get under Mr. Donald Trump's skin for sure.
Boy, we appreciate so much you guys taking time. We're better informed because of it. RT correspondents Alex Mihailovich and Caleb Maupin, thank you both for your time.
Thank you.